Britain, State Chair of Australian Computing Society, here to moderate the panel. So let's give them a warm welcome. Let's give them a round of applause before they kick off.
Thank you, everyone. Over the last few days, I've gone to a number of events. One of the events was the Australian Computer Society Digital Pulse launch, where we were looking at what has taken place in the past, where we're going in the future, and what gaps we need to basically fix up in the IT industry. Today, I'm on the panel with innovators and builders who are leading the path for the future people in the room. I guess what I wanted to start off with by saying is blockchain has been called a lot of things in the past: hype, disruption, and even a threat. But what we're seeing now is really an upgrade of our systems, from the systems that are old over to the new, and keeping them, I guess, not keeping them, but making them faster, smarter, and even more open. It's no longer a theory. We're basically going and moving forward from case studies and making things more faster in the payment section, making, I guess, hard assets more digital and liquid, and even programming trust into the code. And this is where I'd like to start today with Katrina. Katrina, can you please share with us your insights, your powerful shifts, and what you are doing now to move hard to invest assets and making them more accessible and digitising them for us? More about rather than the push, but the pull.
Yeah, so my name is Katrina. I'm the CEO and co-founder of WaterLedger Australia, which is a subsidiary company of WaterLedger Global. I have been around for a long time. My original company was called Civic Ledger, which started in 2016 in Fishburners in Brisbane, Queensland. So I was there right from the early stages when we had the Australian Digital Commerce Association basically taking the double GST off the Bitcoin. And yes, it was a lot of us pushing back in those days, and we had to do a lot of what is blockchain? But that was then and this is now, and I don't talk about blockchain anymore, so I find it very hard to be on this type of panel. I don't like talking, I love our tech, but our customers don't care. They just want to know, can we build something that's going to be better, give you trust, can we have confidence, and is it going to make our customer experience better? So I work in the water space. Yes, it doesn't sound like FinTech, but when you deal with an asset class that's worth billions of dollars and exists in Excel spreadsheets that underpins our entire economy across the planet, we have to think about how we push it forward to become liquid, transparent, and accountable, so our farmers know the value of water, and we all know what the value of water, so we can actually protect its stewardship. And blockchain technology, when we looked around at the toolkit, we didn't put it first. We assessed everything, and in 2017 we realised this was the best technology that we had in our toolkit. So tokenizing real-world assets has been something that I've been doing for nearly 10 years. But as I said, I don't use that language anymore. I use the language of accountability, trust, and transparency. But we are getting the pull now because our customers are government, they are regulators, and they also understand that they have to be accountable to their customers. And through the hard work we've done, we've been able to build up that reputation that we actually know how to do water accounting and markets, whether it be water quality over in Virginia in the US or water extraction here in Australia. So I'm excited, but I'm very excited to be on this panel with all these other incredible people who have a lot more to say, more than me.
James. G'day. Katrina, thank you very much. James, you've been in the industry for a while now. Every industry has a watershed moment. And the tipping point where innovation stops being niche and starts shaping the mainstream. I really love what you're doing with the home loan side of things, so well done. From your perspective, what has been that moment that you've seen in Australia? And also, what's something that you've done recently that you feel has flown the flag for us?
Yeah, okay. G'day, everybody. So James, my photo's up there, so you don't need my titles. I think our industry's watershed moment might actually be in the future. Yeah, I do, actually. So I think obviously our business is doing a lot of interesting things around collateralizing crypto assets, and we help people release equity without selling. So the core use case for our product is it allows you to maintain your market exposure whilst releasing value today. So think of things like buying a car or investing in your business or anything like that. We believe that you can collateralize virtually any other asset in your life, in your financial life, say your home or stocks or things like that. There's no real reason why you shouldn't be able to do that with crypto. And we think that, largely speaking, financial markets are still waking up to the pristine nature of crypto assets. So as an example for you, as a custodian of crypto, we can liquidate crypto into 150 currencies, 24/7, 365, and we can do it instantly. We price our assets multiple times per minute, and I don't know of any other asset class that you can do that with. So it makes it a very interesting asset to lend against, right? So yeah, back to your question. I think the main thing that we're doing, which we think is really sort of paving the way for the Australian ecosystem, is bringing Bitcoin wealth into homes. So we announced it recently that we're doing Bitcoin-backed home loans. And what that means is if you have wealth in Bitcoin, the banks might ask you to liquidate that wealth, or they might assess it in a way that's not completely beneficial to you, or might not be in line with your ideals as a Bitcoin holder. We think that there's a better way to do it. So how we do it is we release your home deposit out of your Bitcoin holdings, and then we broke your mortgage directly to a lender. So you don't need to deal with a mortgage broker yourself. We plumb you directly to a lender who understands crypto and understands our risk profiles. So that's what we're doing, and we think that there's going to be a watershed moment in the future that has Block Earner pretty close to the front of it, I'd say.
Great, thanks very much for that, James. Max, Katrina spoke about unlocking assets. James has spoken about testing boundaries. But there's another area that blockchain is already biting into the legacy systems, and that's surrounding payments and settlements.
Yeah.
And I know that you've been familiar with that clunky process and that you're doing something about it. How far do you think we've come from moving money as easily as sending an email? Do you think it's going to be that easy? And also, do you think blockchain payments will completely leapfrog legacy systems?
Our last bit, that's a tall order. So let me start out by introduction. My name is Maximilian. I'm the CEO and co-founder of Disa. We are a global B2B payments collection and payout solution provider, as well as a provider of escrow wallets for merchants in Europe and soon Australia. And we power a variety of merchants to receive and collect funds out of jurisdictions like as Africa and Latin America. And we see there's a lot of demand for our solution right now. We see that a lot of counterparties of our merchants in Africa today already have Treasury in stablecoins. So that's not theory, it's happening right now. We have a lot of companies in Nigeria, in Kenya, in Uganda that have USDC, USDT and other assets on their Treasury already and are connected already today to the traditional payment system via those stablecoins. As for whether it's going to leapfrog traditional payments at any time soon, I'm not ready to make that statement, but today it's already making a massive tangible impact in those markets, right? So our core markets are not corridors like the US to Europe or Europe to Australia, where traditional rails are already pretty efficient and pretty cheap and fast. Our rails are focusing on Africa into Europe, Latin America into Australia, where the traditional rails are pretty expensive, they're broken, they're intransparent, there are 26,000 correspondent banks in the middle and no one knows who is holding up the transfer. And we're seeing right now, we make it 90% faster for our merchants to receive the funds, 85% cheaper on average. And what we are building essentially is this abstraction layer. And what I mean by that is, if you're a merchant and your business is to sell timber across the globe, or chairs, you don't care about the blockchain. You don't care about the stablecoin. You want an easy, fast, cheap, reliable way to receive funds and send payments. That's all you want, and that's what we focus on, right? We inform our merchants what we're using under the hood as a rail, but again, the core emphasis that we're doing is payments. You receive Australian dollar, you receive euros, you receive British pounds, that's what you want. It's happening under the hood in blockchain, and our merchants really don't care about that aspect. They just want, like I said, the easy, fast, cheap, reliable way to receive funds. So I think like we as an industry, we need to go away a little from this whole tribalism of, oh, I only work with Tron, I only work with Ethereum, I only work with USDT, USDC, etc., and remember that we're just a tiny, tiny fraction of the whole world and the global financial ecosystem, and we need to, interact with, traditional industries.
Can I just add something quickly there? So I was actually having a conversation over lunch, and it was very relevant to what you're just saying. This abstraction layer is exactly what I think this topic, this panel is about, right? This blockchain unbound. So you're exactly right. Nobody cares how it gets done, just as long as it gets done. And the easiest way to bring that into the real world is, like, as a show of hands, who actually understands how the SWIFT system works? Right? Like a very small handful, but we all use it, right?
Yeah.
And you never like bring out your phone and you go, hang on a second, someone explained to me how the SWIFT system works before I send some money, right? But there's this obsession with understanding the underlying technology of blockchain before you do that. So that day's coming, right? With products like yours, where you send Australian dollars and you get US dollars, or you send US, you get euro, whatever it is. That day's coming where you just go, okay, I'm getting the currency that makes sense. Perhaps I don't need to understand all the plumbing.
Most people don't need to know the plumbing. Yeah. Sorry, Max, you also created an escrow wallet. Was that what you...
Yeah, it's a programmable settlement wallet. We have merchants in the real estate sector, for instance. So we are currently working with a pretty large real estate developer out of Southern Europe that is bringing their whole portfolio of villas and apartments they're selling onto our platform right now. It's around a 9-digit dollar deal. And it essentially allows them to easily, send requests from their buyers and receive the payments from their buyers. And we hold it in the escrow in our programmable wallets. And whenever our certain release conditions are met, we release it to the actual developer, and they can then just convert it into euro or pounds or US dollar, or keep it in stablecoins if they choose to. Right, that's up to the developer. But we find this was a very elegant, very simple solution that we get a lot of inquiries from the real estate sector right now.
Thank you. A lot of the innovation is happening overseas, and what we have here is a unique opportunity and an advantage point with Maha being on stage with us, where she can actually tie some of this together for us and speak to us about what is happening overseas from a global perspective and also a public sector point of view. Over to you.
Thank you. Is this working? It's a real pleasure to be here, and it's great to listen to. I mean, I didn't believe that one day I'll be sitting on a panel with somebody who looks at water and financial services. But such is the blurring of how this technology kind of is changing, what we do and how we live. And I do agree that the customer experience doesn't have to be about what the technology is or what it does. I totally agree with that. But somebody has to understand how it works. And this is where the public sector comes in, because we need it to be fast, cheap, what was the other word? But we need it to be secure, resilient, safe, because that's where the trust comes in. And that's where understanding what the technology does is, comes in important. And companies who are doing this and working with, regulators who are regulating, particularly in financial services, that's where a lot of the conversation has been. How do we make sure that this technology actually, and of course the vantage point is what we have today, but how do we make sure that it's going to deliver the right outcomes, and we won't have a moment, in the future that is, takes us the other way, where we see a lot of harm done. And so that conversation, I think, is a very, very important one, and it's important from the point of view of public-private partnerships. So the blockchain technology, or DLT, is I think it's going beyond experimentation. It's now into pilots. It's now into real-world applications. If you look at JP Morgan and Connexus, if you look at some of the actual central banks. So we innovate with central banks. So you can imagine that we're looking at innovation, but we also need to consider all the risk management that comes with it, because central banks are effectively a risk manager. So we need to balance those two things, and that's why understanding what the technology, it has tremendous benefits, but then there's the legal, the compliance, the friction that we see in today's ecosystem, or today's markets. how do we solve for those as well? And what do we need to keep, and what do we need to, really innovate? Does everything have to go to blockchain? We just spoke about, the previous panel was instant payments. I sent an instant payment from my online banking to my friend in Thailand within an instant. It didn't use blockchain technologies, right? So again, thinking about these questions in a really mature way, where you absolutely new technologies is going to change how we do things. We're going to have innovation that is coming through, and we're seeing it on the panel. But it's also a case of what is working today, and how do we complement what we have with what the new is. So for example, some of our work, we look at instant payment systems. We looked at tying instant payment systems on a multilateral basis within the region. And Asia has pioneered with this. So they link their instant payment to another country's instant payment. You can do retail cross-border payments instantly. It uses today's technology, right? But then some of the frictions are compliance processes. So then we looked at how do we use peer-to-peer technology to actually solve for that compliance, burden, such that we make it more streamlined and more automated. We really need to innovate in other things that create friction in the system. Compliance is one of them. Clearing and settlement, it's exactly to your point. It's not a problem sending a payment from, Australia to Europe. It's a problem sending it from some of the illiquid, markets where illiquid currencies come in. And so we've experimented with that. One of our projects is looking at how do we use tokenization, the concept of tokenization, to make that more seamless and efficient. And then I come to stablecoins, and that will be the last point I'll make, and I'll hand back to you. I think stablecoins is a real. It's probably the biggest use case in financial services for tokenization, for using this technology on public permissionless platforms. And there's a real drive of central banks to think about, what does this mean? What does it mean for a two-tier financial system that we rely on to create money in our system today? What does it mean for the role of the central bank as the safest settlement asset? Whether you agree with it or not, a lot of settlement today happens in central bank money. What does that mean? When you've got private issuance of money now coming through. It's a great technology, it's a great innovation, but we need to think about the implications and allow for that to proceed in a way that we think is going to work for the various economies. And every economy will have a different response to that. So I'll leave you with all of those thoughts. Half an hour is not enough. So I'm going to stop there. I can go on for another half hour, but I'll stop there.
Thank you, Maha. 30 minutes doesn't last long. What I would like to do is focus on a rearview mirror. If we were to reflect on the past and look to the future, do you think that the products we've created today will do well in the future? And did we get that right, or did we get that wrong? Who would like to start?
I can kick it off. Obviously, if I wouldn't believe in my product, I wouldn't be building it, right? If I would think that I would go under in 12 months, and in 12 months the blockchain, all the blockchains will collapse, will become obsolete, I wouldn't be wasting my time right now with what I'm doing. If I just look 2 years just in the past, to stick to the topic of stablecoins and payments, I just see how many more businesses, especially in our core markets, have adopted stablecoins as their base of treasury, right? So my co-founders, we went to a big event in Lagos, Nigeria, just last week. And the amount of legit big businesses and merchants that in those markets have already stablecoin on their treasury, and today utilize it for their day-to-day business operations in global payments and domestic payments, because they don't want to rely on NIARA and all the implications that come of it. That's something that's really, really eye-opening. It wasn't the case 5 years ago, 7 years ago, maybe not even 3 or 2 years ago, but today it's really impressive to see how adopted it is today. Maybe not in Australia or Europe as strong as in other markets, but that's not our core focus. So really in markets where they don't have a tradition or history of an established monetary system, we can really see the difference. I'm seeing the time is getting red.
I'd add that in my view, I think crypto and blockchain technology, especially in terms of finance, is going through its adolescence now. And the easiest way to think about it, like there's a popular quote out there that all of the financial crime and scams and equivalents that were done through traditional finance have been done again through blockchain finance, right? Like it just compressed in a much, much shorter period of time. And I think, yeah, obviously that's a net negative, and there's a lot of bad things that have come out of that. The alternate view is that it's been compressed into a very short amount of time. So today we're at a much more advanced point than we would have been in like a traditional finance environment. It might have taken traditional finance 50 years to make the same mistakes that blockchain has done in 4 or 5 years, really, since the invent of smart contracts, right? So I always liken blockchain and time in crypto to dog years, right? So things move very quickly and you get old very quick in blockchain, but the products, they age quickly as well. The customer expectations of blockchain products, they evolve extraordinarily quickly. So businesses like ours and the others up here, it forces us to do new and interesting things in much faster way than you would in a traditional environment. And yeah, I'll stop there.
Katrina?
I'm still thinking. I just remember being on my first panel at Intersekt, and I was in my own little room. Back in the old days, it was like, blockchain people, you be over there because we just don't know what to do with you yet. We think you're interesting, but we still try to figure it out. But I think, when I first started this technology, or when it found me a very long time ago, we didn't know. We didn't know. All we knew was that we had something really interesting in our hands. We had a document called a white paper that was 11 pages long or 7 pages long, and then it set out the entire thing that we're standing on today, Tim. How many, 16 years later, or however, 16 years later, we've actually built an entire global discussion piece around something that we've seen in our lifetime could ever do. But I think looking at the rearview mirror is that I think what has been a gift by being in this technology is because we've had the privilege on this stage to spend the last 10 years on refining our businesses. So when the timing is now where we are being accepted into the ecosystem, we actually know what we're doing and we don't have to backtrack, throw out code. We made all those mistakes in the early days. And it was hard for us because we had to change chains all the time. Who do we build on? What do we do? We were actually our own enemies back in the old days, hacks and all that sort of stuff. But I think what I'd like to say is that the original thought that I had in 2016 still drives on why I do my business today. That mandate hasn't changed, but I just have to keep update with where the technology is and how global this conversation has now become.
So I think, no, if you build today, I don't think it'll be around for the future unless you do what the panellists have spoken about. Keep up to date. Technology is changing at an incredibly fast rate. Enter AI, enter quantum. It's dangerous to think that what you build today is going to be around in 10 years' time. I think you absolutely need to always innovate and think about how things will change. How we live our lives won't be the same in the future, I think. I think, organisations that exist today won't exist in the future. I think currencies that exist today won't exist in the future. We always think about the future from the lens of the past and the present. I think there's going to be new ways of living. Imagine you've got your digital twin or you've got an AI agent that does work for you. How does that interact? And then the entire public and private sector has to adapt. Private sector is actually well equipped to adapt because the innovation happens in private sector at a speed that doesn't happen elsewhere. Public sector needs to catch up. And so I think it's great that we're having this conversation because it's great to hear, yes, you started the technology, but you always had to be on your toes. That's what technology does to you. And as a private sector player, you're constantly thinking about that. We need to also challenge the public sector to do the same.
Yeah, I guess the last thing is that I think what we're entering to is if we do reach singularity by 2030, what does that mean in terms of what a business structure is going to look like? But I think one of the things that is now becoming more evident is with the onset of AI, and I'm just going to do a bit of a badge here, but we're going to have a challenge with nature because of this onset of AI. We're going to have conflict with regard to water and natural assets. So if we're going to be taking on this technology, we've also got to be thinking about the impact that we're going to create in the environment around us and what are we going to do as custodians of this technology to offset those not so good codependencies because of the way we're actually building this technology.
Which is why it's great to have you on a panel for me at least, because the lines are blurred. You can't think of your own industry in isolation anymore. You really have to think beyond, just the little niche that we put ourselves in. It's easy to do that, but you need to think much more, what's the word? Holistically, as much as I don't like using that word, but there you go.
We're pretty much on time, maybe even like 30 seconds fast. I just wanted to thank everyone for joining me here today on panel. I'm in awe of you guys. I'm yet to build, so I've got a lot to learn, and I'm glad that I've got someone that I can learn from that have gone before me. So thank you guys. Thank you.
Thank you.